Hey, my name's James Nicholson. Welcome to my video. Today's my birthday. We got a birthday surprise, a birthday treat from the inflation data, which was better than expected, which is good. Happy Valentine's Day to everybody on here if you celebrate Valentine's Day. Hope you're having a wonderful day. Hope you got some cards, you gifted some cards, or you have a lovely meal. I got some lovely presents today and went out for lunch, and I've got a lovely dinner tonight. So looking forward to that. So the inflation data came out. I would have done this video a bit earlier, but I was out with friends and family and I wanted to digest and see exactly what happened. Well, this data is pretty surprising. So before we jump into that, do smash that subscribe button and hit the bell notification. It's my birthday, guys. If you haven't subscribed, look how close we are to getting 20,000 subscribers. It's possible that we could do that today. If you give me a birthday gift or subscription, that would be really, really kind. Do smash the like button or tickle the like button. Do something to the like button. That really helps us with the YouTube algorithm. It gets more views on the content. That helps the channel grow. So every time you do that, that really helps. So do that part now as well. So the inflation data came out and it was interesting. The Bank of England, a week or 2 weeks ago, when they had their last meeting, they mentioned inflation was going to go up this month. That was their estimate, provisional estimate at the time. It didn't move much at all. It actually stayed the same. Level inflation at 4%. But this is good. This is good because all the analysts got this wrong. I don't know what's going to happen to the mortgage swap rates, but there's a chance, we'll see in the next couple of days, there's a chance that they might react positively to this and we might get a little bit more of a rate war. Who knows? So we'll keep an eye on that over the next few days. But it's good that it's really dropping. And so it is still going down, really, isn't it? So we have got 4% inflation now on an annual basis. But if you look at trueflation, so I had a look at the trueflation today, and that's just what's going on now, right? So right now, the trueflation is saying that the UK, I thought I've got the UK numbers here. Let me just grab that quickly. So that's inflation. Trueflation is just like a more up-to-date version. And that's saying the UK at the moment is at 2.46. And the USA is at 1 point. Oh, sorry. USA inflation, I'll get there in a second, 1.39%. Now, some people say, why doesn't this mean that this number's dropped? Because this is like on a week by week basis. That's what it is right now. This is the annual rate. This is the annual rate. So if the monthly rate, so if we know right now the inflation is down, we can say with confidence that the annual rate's going to significantly drop soon. And that's why they're saying it's going to drop to like 2% very, very soon, because we've got all the high inflation is going to drop off the rolling average very, very soon, because it was earlier last year that we had that. So that's good. So inflation is on the way down. Wages. No, what else have we got to talk? I had the wrong notes. That's why I couldn't find what I'd written already. I've got the right notes now. So yeah, inflation stuck. It's been brought down by food. So food has gone down, which is good because food impacts lower income people significantly more than most costs. Because let's just say you're unemployed, you probably get your rent paid, but you don't get your food paid, right? So you get your dole money or your wages, your lower wages, and energy costs and food aren't covered by that. So that dropping is good. And it's good for everyone, right? We want that stuff to go down. Car prices, secondhand cars went up. That was impacting why the inflation didn't go down. And so that was one of the key things that people saw that was down. So look, they can forecast ahead. We kind of know what's happening. We know that inflation is going to start dropping in March, in April. It's going to get close to that 2% mark. Hopefully the analysts are wrong again and we get a bigger drop than expected. Now, the conversation that we want to have is about interest rates. Where do we see interest rates going after today's data? Well, not much has changed. The Bank of England are obviously saying, we're not going to tell you when the interest rates are going to go down, if ever. That's what their stance is on it. However, what is likely to happen is, well, there's another inflation data report before the next Bank of England meeting. And so what we'll see is that inflation will drop significantly, probably will be at 3 point something on an annual basis then. And then the conversation is going to be more likely that they're going to be thinking about this interest rate drop. Now, the markets ruled out, after the American inflation data, they ruled out May drops pretty much. And it's looking like we're looking at June for the Bank of England base rate to drop. Now, what does this mean for mortgages? Because who cares what the Bank of England base rate is? All you really care about is what's the rate that you can borrow at. I think that rates are going to stay fairly similar. We've seen a few companies, lenders nationwide put rates up marginally over the last few days, but Santander dropped rates. So there was a bit up, there was a bit down. I think you're going to see a fairly flat market. So if you're on a deal right now that's expiring, or you're looking to buy something right now, you've got the option to just take the deal that's in the market now. I don't think you're going to see a drastically better rate. So if you can find a rate around 4%, which is a good rate in today's market, what I'm saying is, I don't think by waiting 6 months, you're going to get a 2% rate or a 3% rate. I think that the best rates that you're going to see from lenders, from the mortgage lenders, the money that you get is, I think that by the end of this year, all being well, you'll see rates at 3.5%. If the Bank of England starts slashing rates because we go into recession, unemployment goes through the roof and all that kind of stuff, I still think the banks aren't going to pass all of that rate cut on to us. They've done it early already. They're kind of pricing in these rate drops from the Bank of England already. So I just think that you should look at securing a rate now. There's a few people that comment on this channel saying, I've got a rate that's 7.8%, I saw someone said the other day. And in that scenario, I would fix a rate now. They're on a tracker rate right now, and that's high. I would go onto a fixed rate, fix it for 2 years, and then go again and see what's going on in the market then. So interesting inflation data. Let me know what you think about that. Do subscribe. Come on, it's my birthday, guys. Subscribe and hit the bell. Let's get that 20,000 subscribers finally. Do smash like, comment below with your thoughts. Where do you think inflation is going to be next month? And if you haven't already joined the Serviced Accommodation Accelerator, I'm going to put the link down below. Loads of people have already joined. Thank you to everyone that's already enrolled in that. It gives you 100 detailed lessons on how to run an Airbnb serviced accommodation business. You can do that with none of your own money via rent to rent. You can do it where you own the property. There's tons of different ways. At least check it out and see what it's all about on that link below. Get enrolled, and it will be a great strategy to add to your arsenal. Do check out all the other content on my channel, including this video right here.